Imagine that right now, as you watch this, someone is sitting at their desk in the financial district, busy at work, buying green bonds. Now, at the same time, halfway around the world, in Norway, imagine a young father playing with his son at a local park. What connects these two seemingly random events? You see, there's a sector where the work, technology, and advancements literally have a global impact. Because flash back to the person working at her desk in the financial district, she's on the climate finance team, and the work they do impacts local and global economies. So by buying Norwegian green bonds, it increases the money available to the local council in Bergen, Norway, so they can invest in green spaces and fund the upkeep of the park, so that father can play in a nice green park with his child.
What people don't realize is a career in the financial services sector is more than just numbers. It's challenging work that impacts, influences, and connects the world's economies. This work affects everyone everywhere, and you should know about it.
Financial services.
Some sort of service that helps you deal with your money or obtaining money.
The big banks.
People that work in banking or like personal financial advisors.
I'm not sure. No idea.
When people think of financial services, the first thing that often comes to mind is what the industry calls retail banking, a one-stop shop for everyday services. And of course, we all know what retail banks do. You can open an account, get a debit card, or apply for a mortgage. It's where friendly, client-focused staff help us save for our retirement, educations, and with investments. While it's true, we all understand what retail banks do. Behind the scenes, they're developing cutting-edge technology that powers the services we all use daily. Technology allows banks to engage with individual customers, however the customer prefers, across multiple channels and devices. So, while your grandma may prefer to bank by phone, you can easily deposit a check using a mobile app. And so what we see is retail banks making large investments in technology that drive advancements in areas like mobile apps, AI, and chatbot technology, creating better experiences and making life easier for clients. Online deposit platforms and interactive tools that analyze savings and spending habits, enable remote transactions, and even help fight fraud. Or digital marketing and customer profiling, so they can send meaningful, perfectly crafted messages customized for each client. And so yes, it's true that retail banks is something we're all familiar with, but that's not the only bank out there.
So investment banks aren't really banks in the way that we think about your traditional bank. I mean, they're a totally different type of bank that helps large and small businesses and governments instead of your average person. Organizations, they really turn to investment banks because they want something. In this case, you think about the need to grow, so they want to access capital or money to be able to do this. And when you're running a business, you could always access capital with a loan by selling equity or some partial ownership of your company, right? So let's take a simple example of how an investment bank works. So let's picture Marissa. Marissa's just created an online concierge service, and this leverages predictive analytics and AI to make personal recommendations for clients. So after 3 years of operations, Marissa has grown her company, and now she wants to expand it even more. So she decides to raise capital by selling almost half of her company to the public. And in this case, the public really just means outside investors. To do this, Marissa approaches an investment bank, which after doing a really comprehensive and thorough analysis, and really what they want to try and see is an assessment of this business. The first step in the process belongs to the division within the investment bank known as Equity Capital Markets, to help prepare Marissa's company for the sale of some of her equity. First thing, they create a prospectus, which basically is a document that shares some critical information on what an investor would need to know about Marissa's company. This will include past, present success, future potential, management experience, all that good, juicy stuff. And really, this is a required and a regulated document. So once that's completed and approved, the investment bank's institutional sales team takes the prospectus on the road. And what they're trying to do is they're trying to build interest in Marissa's company. Their goal is to be sure that investors are ready to line up for this first block of stock or shares in Marissa's company when they become available. This is what we all know as the IPO. This is the big initial public offering, in case you never knew what that was. As part of the process, the investment bank also determines the most strategic exchange to list Marissa's company on. Really, the goal here is so that shares can be bought and sold easily and fairly by investors. Lastly, the investment bank's equity capital markets team will use analytics and their own expertise to set the right initial price for these shares. So this has to be the price that will generate the most money for Marissa while not being too expensive that no one's going to want to buy them. And there's a real good sweet spot there. So the big day's here, IPO day. Everyone's excited. Marissa's company goes public, maybe even rings the bell. Marissa gets her money so she can continue to invest in technology and other things that are really going to help her grow and scale her business. And while Marissa scales and grows, the initial buyers, or shareholders if you would, they are the ones that want to make some money as well. I mean, they're not in this just for charity, right? So what they do is they can either start collecting dividends if this is offered to them, or regular payments that Marissa's company may offer out of its profits or reserves. Or of course, and this is maybe more the traditional way that we think about it, they're going to look to trade some of these shares to other investors at a higher price than they paid if they're smart. So one really important part I want to make sure that we cover in this example is let's pretend Marissa's company has done so well that they decide to start buying other concierge companies. So to help her, Marissa works with the investment banking division in this case, right? These are the ones who are the deal makers. They're on the M&A side, mergers and acquisitions. And they're going to help to merge companies together or help companies buy one another. So obviously, this whole example has been overly simple. I get it. It really doesn't cover the full breadth of what investment banks do, but I think it's a really good start to try to learn what it is that investment banking is all about. I am a little biased though.
Before we leave the world of business investing and growth, there's another space to be aware of, and that's private equity. Private equity firms help businesses that need capital to scale and grow, but prefer to remain privately owned. Private equity firms can also be angel investors or venture capitalists like those on Dragon's Den. While the world of investment banking and private equity may seem complex, this is what makes them dynamic and challenging spaces with remarkable technological advancements powering their work. We've seen people move from paper and phone-based trading, those shouting buy and sell, to robo-investing. Today's trading rooms are actually pretty quiet because complex trades are made by computer algorithms in the fraction of a second.
It's really important to have a sense of how people prepare for their futures and save for retirement, how people are able to build wealth, how companies and pension plans manage assets on employees' behalf.
Yes, and there are a bunch of options and levels of service depending on someone's financial status. For example, people like you or me may use financial advisors, self-directed brokerages, and pensions to invest their money. Whereas people who have a lot more money than the average person may do so with the help of wealth management or private banking services. And finally, there are services one would use as an institutional or corporate investor. And these are services like investment management or asset management.
Okay, that's a lot to absorb. Can we break it down some?
Of course. So to start, financial advisors are professionals who help clients build personal investment portfolios and save for retirement by directing their funds into stocks, bonds, mutual funds, and other investment options on the client's behalf. Now, if you wanted to do the work of building a portfolio yourself, you could, because self-directed brokerages allow people to buy and sell stocks, bonds, even cryptocurrencies through online platforms. And then there's pension plans, which are company or government plans that working employees pay into. These group plans are managed with longer-term horizons to ensure that investments are sound well into the future, when retired employees will get some of it back in monthly payments.
So that's individuals. Second on your list was high net worth individuals?
Exactly. So for this group of people, wealth management, also called private banking, offers tailored and exclusive services that combine things like financial planning and personal retail banking services with other services like estate planning, legal and tax advice, and investment management. The goal of wealth management is to build and sustain long-term wealth.
That leaves institutional or corporate investors.
Right. Investment and asset managers are experts who work on behalf of the investor. And exactly as their name says, they do this by investing in assets and markets. So things like mutual, pension, trust, or hedge funds. And they do this in order to maximize the client's return on their money.
Okay, that makes sense. Now switching gears a bit. I'm hearing some cool technological advancements in this field.
Yes, it's a really exciting time because services like AI-powered robo-advisors and autonomous platforms are becoming the backbone of the industry, providing automated investment advice through complex algorithms to automatically invest and rebalance portfolios according to individuals' risk tolerances and profiles. On top of that, when you're dealing with people's money and life savings, data protection is always a huge focus. The cybersecurity teams constantly review system risks and vulnerabilities and design ways to protect against major online threats like cyber terrorism, cyber warfare, and cyber espionage.
In speaking with Mackenzie and others, I'm amazed at the work that people do within this space. It sounds like it requires a convergence of core skill sets like engineering, data science, and technology wizardry to continuously create better products and services. Now the topic of borrowing money, the concept of buying something now and paying for it later, your basic definition of credit. It's a fundamental element of our economy, and really, when used strategically, there are benefits, like being able to pay for items online securely, protect from fraud, or build your credit score. To help illustrate these points in everyday terms, imagine being out for a jog. You see someone across the way. You make eye contact, only briefly, only for a moment. That happened to Emilio when he first met Ashley. He wasn't out for a jog. He was actually staying late at work, catching up on some things, and stepped out to grab a bite. But the eye contact did happen, and their love story began. Emilio's from South America, and several romantic months later, they decide to visit his family in Buenos Aires. So what does Emilio do? He pulls out his phone and uses an app to book their flight, paying for the trip using a credit card. Behind the scenes, there's a payment technology that enables access to digital currency to make it all happen. And Emilio's credit card provider is automatically tracking and analyzing his spending history to proactively identify additional products and services he might be interested in. That could be travel rewards or insurance, perks like concert tickets in his area, and so on. The credit card provider also uses digital marketing to push out targeted interactive messaging through multiple online and offline channels. And while Emilio may not notice it's all happening, it's creating opportunities that could potentially make his life easier and his experience with the credit card provider more valuable. Flash forward several months, and Ashley's new venture. Did we mention she's an entrepreneur? Well, she is. And her new PR company is doing great, but she needs a short-term loan to help her cover cash flow. Using a comparison website, Ashley's able to shop for the best loan rates and repayment terms. And then she applies through an online lending platform for the loan she needs. Now flash forward even further still, and Emilio and Ashley are doing so well, they decide to buy a condo together. They go into the credit union where he banks to discuss eligibility for a mortgage. A credit union is different from a traditional retail bank in that it's a not-for-profit financial cooperative which enables members to pool their money together. Based on their income, credit history, and overall financial picture, they're approved for a mortgage. So now they'll be able to find the perfect condo. And while they're at it, they also get a dog, Chi-Chi. He's a cutie. And while I'm sure we're all happy for Emilio and Ashley, and of course Chi-Chi, their story does shed some light on how credit and loans, when used strategically, can be used to help drive value in our lives, businesses, and even our local economies.
Social finance.
Some entrepreneurial activity or working connections between organizations. I'm not too sure.
Is generating of funding using a social cause or social networks.
Instagram, Twitter, social media.
Basically, you
stuff,
help
right?
people.
Like maybe social benefits or like helping a social group with their finances.
NPOs, nonprofit. Maybe.
Ever since I found out about the concept of social financing and microfinancing, I've been really amazed by it. Essentially, social financing and microfinancing are basically the approach of taking private capital, but using it to achieve social goals and social change. It's an enabler for under-resourced people because it creates opportunities for any investors. They get to finance projects that benefit society. Really, all investors are working to provide a return on their investment. They want to make money from their money. But with this investment focus, they can see a return while making an impact. Through microfinance platforms, economically disadvantaged people now have the means to invest or borrow money. It's a great thing for communities who would otherwise have no access to financial services. And that's a real social change. Behind the scenes, making this all happen, our teams of data engineers and scientists, they spend all their time building systems that analyze big data and make strategic recommendations. But even in some advanced cases, they're using machine learning and even neural networks to create predictive models to anticipate future behaviors of all the participants on these microfinancing platforms. It's a really amazing space, and not too many people are aware of it. But it's an area of financial services where engineers and scientists, they can just make the biggest difference.
We've walked through a lot of different parts of the financial services sector, and we've thrown a lot at you. But the last area to cover is insurance. People think of insurance for their cars, their homes, but insurance can be applied more broadly than just day-to-day protection. It can be applied to almost anything where there is risk and need to recover from unforeseen events. So, whether it's health insurance like dental care, eye care, often provided under a group benefits plan or disability insurance, critical illness or kidnapping and ransom, casualty and disaster, shipping, space travel. Really, no concert is held, no sport game is played, no building is built without insurance to protect those involved. Simply, an insurer pools together premiums, monthly amounts paid by many policyholders to cover the losses that only some of them end up incurring. And believe it or not, there's even a part of the industry called reinsurance, which essentially is insurance for insurance providers. When a hurricane, flood, or natural disaster strikes, the losses could be too large for insurance companies to bear. For that, they have reinsurance. At the start, I said a career in the financial services sector is more than just numbers. And having worked through all this, I hope you can see it's true. It's challenging work that has a global impact and influence. While I can only scratch the surface with the time I have, I hope you can see the greater range of opportunities available to you within this sector. Working in FS, you have the ability to see the future through predictive analytics, fight cyber terrorism, tell stories through data visualization, or streamline customer interactions with apps and AI, impacting millions of Canadians' day-to-day lives. These are real things. They make real differences, and you should be a part of it.